Okay, guys, let's start. Let's start. We'll start with chapter 7, which is on guys, please. We'll start with chapter 7, which is on cost accounting system. I'll first initially discuss all the concepts in this, and then I'll take you through few problems around this. Now, when we initially started, we did something called as a cost sheet, where we learned there were various categories of cost like material, labor, overheads. Guys, there were multiple categories of cost like material, labor, and overheads, which we had separate chapter. Now all this is accounted. Accounted is passing journal entry, doing ledger posting, preparing a trial balance, getting to know the profit or loss is done through a chapter called cost accounting system. To put it simply, here we are going to maintain accounting records, pass journal entries, prepare ledger accounts, get to know the profit, costing will show a profit, financial will show something else, and do a reconciliation of that. So we technically have two methods of maintaining costing records. One is called integrated system, where costing and financial records are maintained together. We integrate them together and maintain it as single system. Maintain it as single system. When we maintain this as single system, there is no need for reconciliation of profits because I do not have separate system for these two. There is no need for reconciliation of profits. Then I have a non-integrated system where costing records are maintained separately and financial records are maintained separately. In this case, there will be a need for reconciliation because costing will show a different profit, financial will show a different profit. So predominantly we are going to analyze non-integrated system in this chapter. Non-integrated system where we are going to maintain separate records for costing, separate records for financial. Under non-integrated system, the most important thing is understanding journal entry. For understanding journal entry, I'll have to go through what I do in my cost sheet. In my cost sheet, the first item is direct material. So first journal entry is for purchasing raw material. If you have any inflow of raw material, stores control will be debited. Stores control. If raw material is increasing, stores control debited. If raw material is decreasing, stores control credited. So if I'm buying a raw material, stores control account debit to technically we will do to creditor account. We do not maintain a creditor account, so it's called to GL adjustment. We do not maintain a creditor account. It is called to GL adjustment. If you follow integrated system, wherever you see this word GL adjustment, that will be changed. So if it's integrated system, the journal entry will be called stores ledger control account debit to creditors account. And in financial accounting, the entry is called purchases account debit to creditors account. Purchases account debit to creditor. Purchase return, raw material will go down. Purchase return, raw material will go down. So I credit stores ledger control. I credit the store. Issue of raw material to production. If I issue from raw material to production, raw material goes down, WIP goes up. Raw material goes down and WIP goes up. So the journal entry is called WIP control account debit to raw material control account. WIP is increasing, which is increasing, which is decreasing. That's what you have to see. Return of raw material. From there, they return it back. From there, they return it back. If they are returning it back from there, raw material will go up now. Raw material will go up. WIP will go down. If it is going up, raw material control is like an asset. It's like an asset. So if it is going up, stores ledger is debited. WIP control is credited. Normal loss. There will be two types of losses. One is called normal loss of raw material and abnormal loss of raw material. Normal loss is a factory overhead. Normal loss is a factory overhead. Abnormal loss will go to costing P&L. Abnormal loss will go to costing P&L. So for normal loss of material, we will be doing FOH control account debit. Two stores. Why two stores ledger? Raw material goes down. Raw material goes down. Abnormal loss, raw material again goes down. Sometimes I may issue my raw material for maintenance purpose. What is maintenance purpose? Is factory maintenance. It could be administrative office maintenance, selling office maintenance. Wherever you are issuing it, debit that overhead account and credit stores ledger. Credit stores ledger. Reason is raw material is going down. Raw material is going down. Whenever raw material goes down, please keep crediting the raw material control account. Sometimes I may transfer one raw material from one job to the another job. That is, there is a stores, there is a production. Within production, if you are doing any transfer, The technical journal entry is WIP1 account debit to WIP2 account, which we don't record. We don't record because it's under WIP only. It is under WIP control. From one account, it will go to another WIP account because within the production they are shifting. A rare scenario, a purchase. Normally, what happens is whenever I purchase something, purchases will come to stores and then we'll go to production. When it comes to stores, we pass an entry called stores ledger control account debit to the whatever general adjustment, and then we do WIP control account debit to stores. A rare scenario, I may purchase it directly for a special job. Special job means it will directly go to WIP. It will directly go to WIP. It will not even come in raw material control. It will not even come in raw material control. So here, purchase of raw material increases raw material, debit it. Purchase return decreases, credited. Issue of raw material decreases, credited. Return of raw material increases, debited. Normal loss of raw material decreases, credited. Abnormal loss of raw material decreases, credited. Issue of raw material for maintenance decreases, credited. Transfer of raw material, no impact. And issue for special job directly goes to WIP control. This is in the cost sheet, direct material is over. In the cost sheet, direct material is over. After direct material, I have direct labor. First, we will pass payment entry. Payment entry is wages account debit to bank account. We don't call it as wages, we call it as wages control. And we don't call it as bank, we call it as GL adjustment. Wages control account debit to GL adjustment. In this wages, there can be a direct wage, there can be a indirect wage. Direct wage will increase my WIP value. Direct wages will increase my WIP value. Indirect wages is a factory overhead. So I remove it from here and take it to factory overhead. I remove it from here and take it to factory overhead. So we pass an entry called WIP control account debit. WIP control account debit, which is for direct wages, which is for direct wages. And you have your indirect wages. You have your indirect wages, which is factory overhead control account debit to wages control, to wages control. In case any idle time comes, which is a rare scenario, but if it comes, that will go to costing P&L. See, what we are doing is we are crediting wages control. What is the use of crediting the wages control is when you credit wages control, the wages control value will go down. The wages control value will go down. Debit, wages control goes up. In the end, I have to make it zero. In the end, I have to make it zero. So from the wages control, something will go to WIP, something will go to factory overhead, and something may go to costing P&L. Next is direct material done, direct labor done, direct expense in the cost sheet. Direct expenses, we do not open a separate account. So in case you incur anything on direct expense, please take it to WIP control. Directly take it to WIP control account, debit to GL adjustment account. So direct material done, direct labor done, direct expense done, prime cost calculated. Then comes factory overheads. If you pay any factory overhead, journal entries, factory overhead control account debit to bank account, which is called GL adjustment. Bank account, which is called GL adjustment. Whatever is incurred, I will absorb. I will absorb. Absorb means from the factory overhead, it will go to WIP. If you see the process, direct material, you debit something and move it to WIP. Direct wages, you debit to wages control, move it to WIP. Direct expense, directly move to WIP. Factory overhead debit, move to WIP. And this total is called gross works cost. The total is called gross works cost. So I will absorb this to factory overhead. They absorb this to WIP control. Any under or over absorption there will go to debit side of P&L under absorption, credit side of P&L over absorption. Over absorption is a profit, under absorption is a loss. So we have reached factory overhead. Now I get gross works cost. In the WIP account, you will have gross works cost. Write the opening WIP to balance carried down. Write the closing WIP by balance brought down. So GWC, add opening WIP, less closing WIP, you get your net works cost, which is technically called cost of production because we don't have those 5 line item. So in the WIP, I will complete the production. I'll complete the production. Whatever I'm completing, WIP goes down, FG goes up. WIP goes down and FG goes up. So FG control account is debited, WIP control account is credited. What WIP did is it took something from direct material, took something from direct labor, took something from direct expense, took something from factory overhead and moved everything to FG control. Moved everything to FG control. Then entries relating to FG. Whenever entries relating to FG comes, if an organization sells something, two entries have to be done for sales. First is normal sales entry. What is normal sales entry? You will do bank account debit to sales account. Bank account debit to sales account. Bank is not there. GL adjustment. And whenever units are sold, you will have to remove that from the FG. You will have to remove that from the FG. So we pass another entry. One entry is for sales, which is 1 lakh rupee. Cost for that could be 80,000. Cost for that could be 80,000. So one entry is recording sales at selling price. Recording sales at selling price. And another entry is at cost price. Another entry is at cost price where FG is debited, FG is credited. FG is credited because FG will go down and it will go to an account called cost of sales account. It will go to an account called cost of sales account. You can even open a COGS account, but we normally directly do a cost of sales. We normally do directly a cost of sales account. So it will go to an account called what? Cost of sales account. In this account, I will add in the cost of sales account, something comes from FG, something will come from administrative overhead, something will come from selling and distribution. So next, I incur administrative overhead. Incur entry is very simple. Administration overhead to bank account. To bank account, and you absorb this. Administration overhead will be absorbed to cost of sales account. Selling overheads will be absorbed to cost of sales account. Any under or over recovery will again go to costing P&L. Now, this stage, all accounts would have got closed. Sales and cost of sales is not closed. Close sales by shifting to costing P&L. Close cost of sales by shifting to costing P&L. Costing P&L will have sales in the credit side, cost of sales in the debit side, and profit is the balancing figure. Profit is the balancing figure. So whatever you do it in a form of a cost sheet, instead of doing it in the form of a cost sheet, we have to do it in account form. We have to do it in account form. What is the order? I will follow the order of cost sheet. Direct material, any amount which increases raw material debited, any amount which decreases raw material credited, any amount which increases wages paid debited, any amount which is analyzed reduce it. Then direct expense will directly go to WIP control account. Factory overhead, any amount you incur debited, any amount you absorb remove it. Absorption is removing it from that account. Any balancing figure take it to costing P&L. Then my WIP, lot of debits have happened, remove it to FG. Remove it to FG. Then in the FG account, I have opening balance. I got something from WIP. Transfer what you sold to COS account, cost of sales account. In the cost of sales account, I'll add my selling and distribution overhead. I'll add my administration overhead, and I'll get to know cost of sales. It will go, all will go to costing P&L. We'll see this in a question. Now, this is the order I was talking about. Every question will have to follow this order correctly. First is stores ledger control account. This is the order of balancing and order of writing entries. In the stores ledger account, every question should have these four items. When you write direct material, you write opening stock plus purchase minus closing stock, raw material consumed. So there should be an opening balance, there should be a purchase, there should be a closing balance, and issue to WIP is called raw material consumed. Issue to WIP is called raw material consumed. These are mandatory entries. These are mandatory entries in my stores ledger control account. Mandatory entries in stores ledger. After direct material, I have direct wages. In the debit side, you will pay. In the credit side, you will transfer to WIP. In the credit side, you will transfer to WIP. Direct material done, direct labor done, direct expense is not there. Prime cost, no separate account. Factory overhead in the debit side, incur it. Credit side, absorb it. Credit side, absorb it. After factory overhead, WIP. WIP will have an opening balance. It will get something from raw material. It will get something from wages, something from factory overhead. Transfer this to FG. Transfer this to FG, and there will be a closing balance. There will be a closing balance. FG control will have an opening balance. It will take something from WIP, shift this to COGS and a closing balance. Shift this to COGS and a closing balance. After that, AOH, incurrence, transfer. SOH, incurrence, transfer. Cost of sales, you will get something from FG and shift it to costing P&L. Shift it to costing P&L. Sales, record the sales, shift it to costing P&L. Clear? Any doubts on this? Apart from this, we also have something called as a reconciliation. Now, what is reconciliation is my financial account shows a different profit, costing shows a different profit. The reasons for difference can be multiple. Certain transactions are recorded only in financial book, but not in costing book. Example, interest on loan, income tax, dividends paid, the interest income, rental income. All these items you record in financial accounting. In cost sheet, you don't record it. This leads to difference in profit. Or some items I record in costing. Example, notional rent, salary to proprietor, opportunity cost. All this costing allows, but financial does not allow. Saying that financial says if money is paid, record it. If money is not paid, don't record. Own rent, all that is not possible. And some amount may be different in costing, different in financial. Opening stock in costing is 20,000, financial is 30,000. Now, I have a format to do reconciliation. I'll explain this format when I do the problem. This format will help me in identifying the plus and minus items easily. There are two ways of identifying plus and minus item. One, you'll have to keep thinking which is going up, which is going down, and then analyze it. Or I have a format called serial number, item, figure as per end book, figure as per start book, difference, debit, credit, action, and amount. You will understand this when I do the problem. This will help me in identifying what are the items to be added in reconciliation, what are the items to be deducted in reconciliation. Now, reconciliation can be of three types. One, question will tell costing profit so much, financial profit so much, and 10 reasons are there. You just need to find out the reason plus certain items minus certain item. This is one approach. Second approach, they'll give you so many transactions. You prepare one cost sheet that will give you costing profit. You prepare one trading and P&L account that will give you financial profit. Both will show difference. Both will show difference. Then you have to compare one item with the other item. Like when you do bank reconciliation statement, I can have statement in one side, I can have my book in one side, and then keep comparing. When I compare, I may find certain items which are causing the difference, certain items which are causing the difference. Then I have to do reconciliation. So reasons could be given in the question, and sometimes they will not give the reasons. You will have to identify. You will have to identify the reasons and do the reconciliation. Okay, this is what this chapter is all about. There are only one is journal entries. You should be very, very clear. Journal entries should be very, very clear. And the order is very simple. Direct material, direct labor, direct expense, factory overhead, WIP control, FG control, administration overhead, selling overhead, cost of sales, sales. This order, if you follow properly, you will be in a position to handle any type of question. So this is one approach which is there. And the second part is reconciliation, where I'll have a costing profit and I'll have a financial profit, and I'll have to find out the reasons for the variation. Clear? Uh, 2 minutes. I'll have to restart my system. There's some problem. I'll just restart and then we do the questions. Okay, we'll see few questions. First is on journal entries. This we are just going to discuss. Journalize the following transaction, assuming that cost and financial transactions are integrated. Integrated doesn't mean you need a different entry. Wherever the general ledger adjustment, I said GL adjustment, there are different names for it. Cost ledger control. That name will not be used, and we will use a name called bank account, debtor account, creditor account. Those names will be used in place of that. Raw material purchased. Raw material value goes up, goes down. Participate. Goes up. Stores ledger control account debit to creditor account in case you have not made the payment, or to bank account, or to bank account. Stores ledger control account debit to bank account. Direct material issued to production. Raw material goes down, goes up. Goes down. WIP control account debit to stores ledger control account or raw material. Different names will be used in different question. Wages paid. First tell me the entry for wages paid. 30% indirect, we'll see later. Wages payment. Wages control account debit to bank account. In this, I'm analyzing now. What I'm analyzing, 30% is indirect, 70% is direct, which is this 84,000. Direct will go to WIP control, indirect will go to factory overhead control. So the entry will be WIP control account debit, factory overheads control account debit to wages control. Wages control is closed. Wages control is closed. One you debited for 1,20,000. Now you are crediting for 1,20,000. Manufacturing expenses incurred. Any expense you incurred, what's the journal entry? Expense account debit to bank account. We don't call expense. We call it as manufacturing overhead control or factory overhead control account debit to bank account. If you have paid it, if you have not paid it, to payable account. So factory overhead control account debit to bank account, and charge to production means absorb to production. Charge to production means it goes to WIP. So the entry will be WIP control account debit to factory overhead control account, to factory overhead control account. First you debit for whatever you have incurred, then you absorb it, selling and distribution cost, I don't know whether it is incurred or absorbed. I'll write two entry. Incurred is selling overhead control account debit to bank account, selling overhead control account debit to bank account. Absorbed is it will go to cost of sales. Absorb means which account it will go. Cost of sales account debit to selling overhead control account. Cost of sales account debit to selling overhead control. Finished product at cost. You need to understand this. This technically means production during the year. This terminology technically means production during the year. When production happens, FG will go up, WIP will go down. FG will go up, WIP will go down. So entry is FG control account debit to WIP control account. FG control account debit to WIP control. Sales. Sales normal entry, bank account debit to sales account or debtors account debit to sales account. Now closing stock is nil. It means this 2 lakh 90 sales, the cost for that is 2 lakh. Whatever you produced, you have fully sold. Whatever you have produced, you have fully sold. So whenever sales happens, I need two entry. One entry is bank account debit to sales account. Second entry, FG has to go down. FG has to go down. So two FG control, two FG control. But you cannot write 290 because FG cannot go down by 290. FG sales has a profit element. Sales has a profit element. FG doesn't have any profit element. So the entry there is cost of sales account debit or COGS account debit to FG control. COGS account debit to FG control. This is self-explanatory. Receipt from debtor. Receipt from debtors is bank account debit to debtors account. In case it's non-integrated, I don't have bank account, I don't have debtor account, so I cannot write saying cost ledger control to cost ledger. No entry in non-integrated. In non-integrated system, I'm least bothered whether money is collected from debtors, money is not collected from debtors, money is paid to creditors, not paid from creditors. All this is not my worry. So under non-integrated, these two entries will not come. The question has asked for integrated. So we have done the entries for integrated. You see the word creditors. In place of creditor, you have to write GL adjustment or cost ledger control. That becomes non-integrated. That becomes non-integrated. Okay. Now ledger maintenance. A company operates on a job cost accounting system which is not integrated with the financial accounts. At the beginning of the month, the opening balance in cost ledger where there's a opening raw material stores ledger, opening WIP, opening FG. There's an account called building construction. What is building construction? Is building which is yet to be constructed, building which is yet to be completed, and cost ledger control. If you see here, all this will have debit balance. This alone will have credit balance. This alone will have credit balance. Please open four accounts now. Stores ledger control account will need 8 lines, WIP 10 lines, FG 8 lines, building construction 8 lines. Open 8 to 10 lines. You open the 5 accounts. Stores ledger control account debit. Sorry, that is debit and credit, please. Debit, credit, stores ledger control account. Particulars amount. WIP control account. We will need extra accounts, but as of now, open these. WIP control account. FG control account. Building construction account. Building construction account. Whatever name the question has used. Cost ledger control. Some question they'll use the word general ledger adjustment account. Cost ledger control account. Technically, it's a suspense account. That's all. What is cost ledger is? It's a suspense account. We are not bothered about what it is. cost ledger control account. Now in every account, write the opening balance, to balance brought down, to balance brought down, to balance brought down, cost ledger 80, WIP 20, FG control 430, building construction 10, and cost ledger control by. My trial balance is tallying as of now. These are my opening balances. By balance brought down. Opening balances 4 ledgers, debit balance, 1 ledger, credit balance. 4 ledgers are debit balance, 1 is credit balance. Can you proceed? Let's look at the transaction. Material purchased. Tell me the journal entry. Material purchased. Stores ledger control account debit to cost ledger control. Stores ledger control account debit to cost ledger control account. Do the posting. Stores ledger control account debit to cost ledger to CLC account. To CLC. I am using short name. You need not, in exam you cannot use it, in class okay. To CLC account 40 by SLC account 40. By SLC account 40. In class short form is okay. In exam no short forms okay. By SLC account 40. Next transaction issued to production. Tell me the journal entry. Issued to production. WIP goes up, raw material goes down. WIP goes up and raw material goes down. So by WIP control, by WIP control, by WIP control, by WIP control 50. Again, this area is very simple if you are able to understand the transactions properly. To SLC 50. By WIP control 50 to SLC 50. Next is issued to maintenance. Maintenance is a factory overhead. Issued to maintenance. Maintenance is a factory overhead. Raw material goes down, goes up. First tell me. Goes down. We will credit it. We will credit it right by factory overhead control account and open a factory overhead control account. Open new account. By factory overhead control account. By FOH control account 6. Open FOH control account. Factory overhead control account. FOH control account to SLC account. To SLC account 6. Issued to general maintenance. Issued to general maintenance. Raw material values going down. Raw material values going down. Clear? Then next is issued to what? Building construction. Listen, building construction means the value of building under construction goes up and raw material goes down. Raw material goes down. So this will go to my building construction account. This will go to my building construction account. So go there by building construction. By building construction. Reduce the raw material value. By building construction. How much? 4. And in the building construction account. In the building construction account to SLC. To SLC account 4. Majorly raw material entries are over. If later on anything comes, we'll see. So raw material going up debited, raw material going down credited. Very simple approach. Clear? Next is wages paid, gross wages paid. Tell me the entry for wages paid. Wages control account debit to CLC account to paid to CLC. In that direct indirect is later analysis. Wages control to CLC. Open a wages control account. Open a wages control. FOH control, another some 6 lines you will need. Now onwards, whichever account you open, 6 lines is sufficient. Wages control account to CLC account 150. To CLC account 150. To CLC account 150 and go to cost ledger by wages control account 150. By wages control account 150. Clear? simple wages control to this. Then in this, indirect is 40, building construction is 10. Logically, the balance 100 is direct, but that balancing figure and all we'll see later. Indirect will go to factory overhead. Indirect will go to factory overhead. So from the wages control, remove means write it in the credit side. In the credit side, right, by FOH control account, by FOH control account 40, by FOH control account 40 to wages control 40. Direct wages and all I'll see later. Let's not worry now. By wages control 40 to wages control 40. Clear? Then building construction, by building construction, take it to building construction account. Take it to building. From wages, I'm removing it. From wages, I'm removing it and taking it to the building construction account. It says issued to building, sorry, for building construction is 10. Right, by building construction. By building construction 10. And in the building construction account, to wages control 10, to wages control 10. Clear? Works overhead amount incurred excluding item shown above. Okay, in this question, ideally name should have been works overhead control account and not factory overhead control. They have used the word works overhead. Take an exam situation, you take care. I have incurred. What is the entry for incurring works overhead? Amount incurred. Any expense account debit to bank account. We don't have bank. Bank is called CLC and works overhead control. So works overhead control account debit, right? Works, that is factory overhead control account debit to CLC account. To CLC account 160. To CLC account 160. To CLC account 160 by FOH control account 160. By FOH control account 160. Clear? They are saying whatever you incurred, you have absorbed 20 in building construction. That is removed from this account and take it to which account? Building construction account. Take it to building. Like from raw material we took something, WIP we took something. This also take it. So by building construction, by building construction, by building construction account 20, and in the building construction account to FOH control, to FOH control 20, to FOH control 20. Clear? Next it says under absorbed 8, under absorbed 8, open and say by costing P and L. Under absorption will go to debit side. Under absorption will go to debit side of P and L. Over absorption will go to credit side of P and L. By costing P and L and open a costing P and L account. Open a costing P and L account. By costing P and L 8. Under absorption, open a costing P and L account. Costing P and L account. Costing P and L account to FOH control account 8. Under recovery will go to the debit side. Under recovery will go to the debit side. Any doubts on this? Then the next transaction is royalty paid. Royalty is a direct expense. Royalty is a direct expense directly in the WIP control. Directly in the WIP control. WIP control to bank. Bank is not there. To CLC. WIP control to bank. Bank is not there. So in WIP to CLC account. To CLC account. Royalty. To CLC account royalty 5. To CLC account royalty by WIP control. By WIP control 5. By WIP control 5. Clear? Any doubts on this? Then it says selling, distribution, and admin overhead. I'll have to open a new account. I'll call it as selling and admin overhead, SOH and AOH control account. I'll give a name SOH and AOH control account to bank account. Bank account is not there. Bank account is not there. Open new account. The only problem is we'll have to keep opening multiple accounts, but in the end, you will get to the answer SOH and AOH control account. SOH and AOH control account to CLC account. To CLC account 25. To CLC account 25. In the CLC account, by SOH and AOH control account. By SOH and AOH control account 25. By selling and admin overhead control account 25. Clear? Be the journal entry for sales. FG is cost of sales. FG is on the cost of sales. Normal sales, what is the entry? Bank account debit to sales account. I don't have a bank account. I don't have a bank account. CLC, open a sales account. Open a sales account. To sales account 450. To sales account 450. Open sales account. Open sales account. To sales account 450. And open sales account. You will understand this better when I go to balancing part. Once all transactions are written, by CLC account 450. By CLC account 450. Clear? The next it says at the end of the month, stock of raw material and WIP is 55 and 25 in the raw material control account by balance brought down, in the W by balance carried down, and in the WIP control account by balance, closing balance. Closing balance 55 and 25. So right here. In the raw material control, leave one line gap in case any balancing figure comes. By balance carried down 55. By balance carried down 55. In the stores ledger control, by balance carried down 55, and this side by balance carried down 25. By balance carried down 25. You have to keep writing transactions. So once you write all transactions, everything else will automatically fall in place. Then it says loss arising in raw material is treated as factory overhead. When I do the balancing, you may find a loss in raw material control account. Loss, two types is there: normal loss, abnormal loss. Normal loss goes to factory overhead. Abnormal loss goes to costing P&L. The question has said, please treat it as factory overhead. Please treat it as factory overhead. So when I close the account, I will tell you. As of now, let's leave it. Building under construction is completed. This is to close the building under construction. GP margin is what? 20%, which means COGS is 360, sales is 450, and cost of goods sold is 360, 20% less. This will be removed from my FG. This will be removed from the FG. So in the FG control, by cost of sales, we call it as cost of sales, not COGS. In cost of sales, we will add selling and other things. By cost of sales account 360. By cost of sales account 360. Go to FG control. By cost of sales account, 360. 450 minus 20%. Open a cost of sales account. Open a cost of sales account. Open cost of sales account. To FG control 360. To FG control is 360. Clear? Any doubts on this? Done? Now I have noted down all the transactions. Practically, that is when I have to do the balancing. I expect you to remember this order as well as the mandatory entry. If you don't remember, you will find it difficult. Remembering doesn't mean you will have to by heart it, it's logical. First is raw material control. Go to your stores ledger control account. See, is there an opening balance in stores ledger? Is there any purchases entry? There is purchases entry. You would have written two cost ledger control. You would have written two cost ledger control. Is there any issue to WIP? Is there a closing balance? Yes, it should tally. Not tallying, there is a loss in this question. That's all. These four are mandatory. These four are mandatory. Let's close this account. Let's close this account. It will not tally in this question. By factory overhead control, normal loss. This is technically normal loss. Sometimes what will happen is out of those four items, one will be balancing figure. They may not give closing raw material. That can be balancing figure. In this question, if closing raw material was not given, balancing figure would have been 60 in the credit side. Balancing figure would have been 60 in the credit side and we would have closed it. They have given all the four. Mandatory four items are there. Take this to factory overhead control. Take this to factory overhead control. To SLC account 5. To SLC account 5. Clear? Direct material over. Next is direct labor. Look at wages control. In the debit side, is there a payment entry? In the debit side. In the credit side, is there a WIP entry by WIP control? No, that's the balancing figure. That's the balancing figure. Please close that account. Please close the account. By WIP control. By WIP control, close this account. See, mandatory are these two. Apart from that, extra can be there. This indirect wages, building, all these are extra. Mandatory, one payment, one absorption. Take this to WIP control. Take this to WIP control. In the WIP control, to wages control. To wages control, 100. Clear? Direct material done. Direct labor done. Cost sheet. Keep remembering cost sheet. Everything else will automatically fall in place. Next is factory overhead. In the debit side, is there a payment entry? Look at your factory overhead control account. Can we move to factory overhead? Is there a payment entry in factory overhead control account? To CLC. To CLC. Is there an absorption entry to WIP? No, that's balancing figure. That's the balancing figure by WIP control. By WIP control account. By WIP control account. 183. By WIP control 183. I'll write this in WIP control. By WIP control 183. Any doubts on this? Clear? So in the WIP control, two FOH control accounts 183. Clear? Next is WIP. Look at your account. Is there an opening balance in WIP control? Participate. I want participation. Is there any transfer from stores ledger control? From stores ledger. Anything from wages control? Anything from factory overhead? Any transfer to FG? Any transfer to FG? Closing balance? So the balancing figure is by FG control. Balancing figure is by FG control. By FG control. This is production during the year. By FG control account. By FG control account. Production during the year. 333. This is technically COP, cost of production. This is technically COP. By FG control. Clear? And here we will write WIP control 333. To WIP control 333. Any doubts on this? Then it says order WIP is closed. FG. Is there an opening balance in FG control? Any transfer from WIP? We just now wrote. Any transfer to cost of sales? Closing balance is balancing figure. By balance carried down, this is closing FG. This is closing FG. It's very simple, process driven, time consuming little bit, but if you practice 2 3 questions, then you can do it faster also. By balance carried down 403. Any doubts on this? Done. After FG, admin overhead control. Admin overhead control. We opened SOH and AOH. First is incurrence entry. Is there any entry on debit side? And please move this to by cost of sales account. Move this to cost of sales. Move this to cost of sales account. Clear? So this comes in my cost of sales account. Now it's over. Question is almost over. 2 AOH and SOH control account. Listen, this is COGS. This is selling overhead. Put together is cost of sales. By costing P&L. Take it to P&L account. By costing P&L 385. By costing P&L 385. This is to costing P&L. Sales will also go there. To costing P&L 450. Sales and all is just a formality. I don't even need it. I can directly also write it, but rules are like this. By costing P&L to costing P&L. So I come to costing P&L by sales 450 to cost of sales 385. This will give me profit or loss for the year, which will go to cost ledger control, because the entry for profit or loss is P&L account debit to capital. I don't have a capital account. I don't have a capital account. This will also go to cost ledger control. Cost ledger control to CLC account profit for the year. To CLC account profit for the year. How much the profit? 57. To CLC account profit for the year. Any doubts on this? I come to CLC account by costing P&L account. How much the figure was? 57. All accounts are closed except two. One is the cost ledger is the last closure. Okay, building construction is not closed. They have said building is completed. If building is completed, entry is debit the building account, credit the building. I have to close this. By building account, which I don't have. I don't have a building account, so by CLC. By CLC, we are closing this account. That's all. By cost ledger control account. I do not have a building account. I do not have a building account. So to close this, by cost ledger control. By cost ledger control. How much is the amount? 50, 44, no? And that's our last account which has to be closed. To building construction 44. One, ability to write the journal entries properly is very critical, and second is flow of transaction. Flow of transaction. If you can exactly do proper flow, you'll be able to get to the answer in a smooth manner. CLC balancing figure is how much? CLC balancing figure 977 minus some 483 I get. Clear? Now question may, I don't know what was even asked in the question. Prepare the relevant accounts. That's all. Relevant control account. I would have done a trial balance mostly just to finally show our answer is right. Okay, trial balance is not done, but In the trial balance, what will come? I'll tell you. 55 will go to trial balance, 25 will go to trial balance 80, and 403 will go to trial balance 483. That's all. Raw material control, stores control, WIP control, every other account is closed, and cost ledger control was 483. Cost ledger control was 483. Clear? Any doubts on this? Most important is understanding the sequence properly. Sequence is very simple. It is the order of cost sheet. What is mandatory in those accounts is very critical for you to balance the account. So I have one more question which I'm not doing, but this is a reverse working question. If you follow exactly the pattern, you will be able to close the accounts and get to the answer. Exactly the rule. The rule is first raw material control, then WIP, then your direct wages, then comes your factory overhead, then comes your WIP, then comes to your FG. If you follow the order and the mandatory ones and the mandatory, this is a very good question where they've asked you information. If you open the accounts and record all transaction, automatically you'll get to the answer. A very good problem for you to practice. Now, what is predominantly tested in exam is reconciliation. So I'll come to reconciliation question. This is one type of reconciliation where a manufacturing company disclosed a net loss of 347 as per their cost accounts for the year ended March 31, 2014. Financial accounts disclosed a net loss of 5 lakh 10,000 for the same period. So costing 347, financial is 5 lakh 10. Our job is to do reconciliation. Our job is to do reconciliation. Reasons are given in the question. What I need to do is I need to add certain items, deduct certain item. They have asked for something called as memorandum reconciliation account. Account means the reconciliation will be in a debit and credit format rather than plus and minus format. What to do? I'll explain. Now, whenever we do a reconciliation, we will have a starting book and an ending book. You can start your reconciliation with costing, end with financial, or start with financial and end with costing. That's your wish. One order you have to decide. I will keep it as I'll follow whatever it is. Okay, my starting will be financial in this question. The solution is presented that way. I'll do that. Starting is this, ending is this. Starting is showing negative 510, ending is showing negative 347, ending is showing negative 347. I have 10 items. One is you think about every item and find whether it is plus or minus. Other approaches which I'm going to teach you, whichever way you are comfortable. If you can logically think also, it's fine. Now write identification of plus and minus item. Identification of plus and minus item. Plus and minus item. Serial number. Item causing difference. Figure as per end book. Figure as per start book. Figure as per end book. You please write this. 8 columns, I think. Figure as per start book. Difference, debit, credit, action, amount. 8 columns. In here, right? End book is equal to costing. Start book is equal to financial. That is how I am solving it. Okay, you can solve it in either ways. Some question will specifically say which is starting, which is ending. Now it's very simple. First item is right serial number 1, factory overhead. Factory overhead. See, under absorbed or over absorbed is all costing feature. It is not a feature of financial accounting. Financial accounting value is financial book value is 0. Financial book value is 0. Costing is under recovered. Under recovered means lesser. Under recovered is lesser, minus 40. minus 40. Minus 40,000 and 0. Minus 40,000 and 0. Now what you need to do is listen. Third column minus fourth column. I want you to do 3 minus 4 and tell me what amount you get. 3 minus 4. What amount will you get? Minus 40,000. If you get minus 40,000, sign write it here. Sign. Amount write it here. Sign write it here. Minus 40. You told me minus 40. Sign write it here. Amount write it there. Clear? Column 3 minus column 4. Sign write it in the fifth column. Amount write it in the eighth column. Factory overhead. Factory overhead. Is it a debit item or a credit item in a normal P&L? Factory overhead. Under recovery, over recovery, don't tell me. Only factory overhead is a debit item. All debit will reduce my profit. All debit will reduce my profit. So debit means minus. Debit means minus. In my reconciliation, I'm going to do minus into minus. Finally, this item will be added. Finally, this item will be added in the reconciliation statement. Minus into minus. Minus into minus. I'll do 2, 3 items and you will get full clarity. Minus into minus. In the reconciliation, what we will do? We are just going to add this item. Let me write 2, 3 items. Point number 2. Second item is admin overhead. Over absorbed. Financial 0. Financial doesn't have all this. Financial 0. Over absorbed. Over absorbed means you have recovered more. 60,000. 60,000 minus 0. Tell me the sign first. Is it a plus sign or a minus sign? Plus. Amount is 60,000. Plus and amount is 60,000. 60,000 minus 0 is plus 60. Plus 60. Debit or credit. Admin overhead. What do you do normally? Debit. Minus. Plus into minus. This is minus. Plus into minus. This is minus. Let me write 3, 4 items and then full clarity will be there. Point number 3. Depreciation. Depreciation. Tell me how much depreciation in costing. Financial is 3 lakh 25. Costing is 2 lakh 75. So costing 275. Financial 325. Subtract and tell me the sign. Minus amount 50,000. Depreciation debited credited. Minus into minus plus. In the reconciliation add it. In the reconciliation add it. Minus into minus plus. Clear? Able to understand this? Clear? Next item. Interest on investment. Interest on investment not included in cost accounts. Interest on investment. Costing 0. Financial 96,000. 0 minus 96,000. 0 minus interest on investment debited credited plus credit is plus minus into plus is in the reconciliation I'll subtract it. In the reconciliation I'll subtract it. Fifth item. Fifth item is income tax. Income tax. Income tax will be provided only in financial book. Income tax will be provided only in financial book. So costing is 0. Financial is 54,000. 0 minus 54,000 is minus 54,000. Income tax debited credited. Debited minus into plus. Debited minus minus. Minus into minus is plus. Clear? Any doubts on this? Please do next to 4 items like that. Next to 4 items. Write the next item: interest on loan, transfer fees, stores adjustment, dividend receipt. This will help you in identifying plus and minus item very easily. Other approaches to think logically and find out. I am more comfortable doing this. This ensures I get to my right answer. The important part is what is starting, what is ending. That has to be defined, and accordingly you will have to do. Third column is starting, ending book. Fourth column is starting book, end book, and start book. You change the order, answer will change. What is plus will become minus, what is minus will become plus. Okay, assuming you are able to do this, which is these answers. Transfer fees is, I did till income tax. Okay, transfer interest on loan is plus, transfer fees is minus, stores adjustment is minus, dividend is minus. Beyond this, I'll take you through. Can you tell me the total of all plus items in your notebook? Total of all plus items. Whatever plus 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 you have, tell me the total of all of that. Sorry, how much? 3 lakh and minus items total. Minus items total. 2 lakh. Okay. Assuming there is only one item. I don't want to keep writing all the items. Approach is going to remain same. See, first approach, you need not write anything now. First approach is profit as per financial book. Profit as per, this is statement which is not needed in this question, but this is first approach. Financial book showed me a profit of minus 510. Be it profit loss, I'll just change the sign. Minus 510. Add plus items. You will have to write 1, 2, 3, 4, 5. All item you have to write, which I'm not doing. My plus items total is 3 lakh 89,000. Then deduct minus items is 2 lakh 26,000. In the calculator, minus 510 plus 389 minus 226. Negative, you would have got negative 347. Loss as per costing book. Now, in exam, what can happen is, recently what ICI started doing is they'll give you this, they'll give you all this, and they may ask this. Instead of doing reconciliation, they may ask, calculate the profit as per the other book. Calculate the profit as per the other book. That is the ending book. Doesn't really make any difference. You have to identify plus and minus. Second is memorandum reconciliation account. Memorandum reconciliation account. Very simple. Minus means debit. Minus means debit, and plus is credit. Plus is credit. What is the total of all plus items? By plus items 3 lakh, minus items 2 lakh. What was our starting book? Which book it was? Financial book. To loss as per financial book. To loss as per financial book. How much? 5 lakh 10,000. I closed the account by loss as per costing book 3 lakh 47,000. This is called memorandum reconciliation account. In the memorandum reconciliation account, first write the loss in the debit side or profit in the credit side. That's known fact to you. Then all plus items will be credited, all minus items will be debited. All plus items will be, because debit means minus, credit means plus for us. Debit means minus, credit means plus. Any doubts on this? So this is one way of reconciliation. One way of reconciliation. Any doubts on this? So you see the statement here. This is the detailed statement. Item 1, item 2, item 3, item 4. You'll have to keep writing every item and keep writing and you'll get to the loss as per the other book. Second approaches, I'll come to question 5 in a minute. This is another type of a question which we are not going to do. Listen, the financial books of a company reveal the following data. What you need to do, you need to do a profit and loss account. What will come in profit and loss account? 2 opening stock 74, 2 opening WIP 32, 2 raw materials 780, 2 direct labor 450, 2 factory overheads 3 lakh, 2 goodwill 1 lakh, 2 admin overhead 295, 2 dividends 85, 2 bad debt 12,000, 2 selling and distribution 61, by interest received, by rent received, by sales, by closing stock, by WIP. This will be the financial profit. This will be the financial profit which they did not give you. They are saying you do all this extra work. You do all this extra work and get to the profit. What will happen to costing? Prepare a cost sheet. Prepare a cost sheet. For cost sheet, I need direct material. If extra data is not there, copy paste the financial number. Copy paste the financial number. So if you see here, this is my financial accounting. This is my financial accounting. This is my cost accounting. I am not going to explain both of this because cost sheet we have already spent a lot of time. After this is done, I will check item by item. Direct material 7 lakh 80. Okay. Direct material here also 7 lakh 80 will not come in reconciliation. Will not come in reconciliation. Direct labor 450, 450 will not come in reconciliation. Factory overhead 270. Here it is 3 lakh. So figure as per cost book 270, figure as per financial book 3 lakh, plus minus debit credit, all that you keep taking care. First reason why profits are different. Last question gave you 10 reasons. This you have to identify now. This you have to identify now. It will not give the reasons. This is one reason. Then opening WIP 32. Opening WIP 32, no problem. Opening WIP, same, no problem. Closing WIP 38, 38, no problem. Admin overhead 298, 667, 295, second reason. This is a problem. 295 and 298, 295 and 298. Then opening FG 91,000, opening FG 91,000. Third reason 74, 375, 74, 375. Closing FG 48,000, closing FG 48,000. Here the closing FG is 41, 250, 41, 250. Fourth reason for variation in profit. Fourth reason for variation in profit. Then selling and distribution 58, selling and distribution 58. Here it is, doesn't end here. Then I have dividends, sixth reason. Dividend is not there. Goodwill written off, seventh reason. Bad debt, eighth reason. Interest received, ninth reason. Rent received, 10th reason. So whichever item is not matching, all these are reasons. What last question did is, they gave you financial profit. They gave you costing profit. And they gave you all these reasons. They gave you all these reasons. What you did? You started from the reasons and found out the plus and minus item. If I want to increase the number of marks, that question will be a 5-mark question. This type of a question will be a 10-mark question where I tell you, you please calculate the financial profit. You also calculate the costing profit. See, there can't be anything simpler than this. This is just normal financial accounting. Costing, you have to do a normal cost sheet, no special adjustment, no special adjustment. If data is not there, you copy paste the financial data. If data is there, you write it. Clear? Any doubts on this? Any doubts on this part? Then identify the differences, and these differences will be the reason for profit variation. I come back to this type of a question which involves journal entry. Let's come to question 5. You are given the following information of the cost department of a manufacturing company. Stores is stores control account, opening balance, purchase, transfer from WIP, issue to WIP, issue to repairs and maintenance. Shortage found in stock taking. Shortage can be a normal shortage, abnormal shortage. I'll have to write the reason. WIP, opening balance, wages applied. Wages applied means from the wages control account, it is coming here. Overhead applied, closing balance, finished product, other information. Shortage is treated as normal loss. Shortage is treated as normal loss. Stores control account, WIP control account, costing P&L account. P&L account is financial P&L. P&L is financial P&L and a reconciliation Please open the four accounts: stores control, WIP control, costing P&L and P&L. This is a very frequently tested exam question. Stores control, WIP control, stores control account, some 8 lines. WIP control, WIP control account, costing P&L account, and a P&L account. And a P&L account. We will open certain extra accounts when needed, but these are the 4 accounts as of now. I will be needing cost ledger control, but I'll not open it because I'm not doing a trial balance and all here. No CLC account and all. Some accounts I'll open when I'll need it. Let's go through the question. Stores opening balance. Where should I record this? Stores control account, and one more place is in the P&L account, in the normal P&L to opening stock, in the normal P&L, in the normal, not the costing P&L. So to balance brought down, to balance brought down, to balance brought down 1260, to balance brought down 1260, and to opening raw material, to opening raw material 1260 in the P&L, in the P&L to opening raw material 1260. Clear? Next, purchases. Purchases, tell me the journal entry. Stores ledger to CLC account. I'm not opening CLC. I don't need CLC account. Do the entry. Stores ledger to CLC. To CLC. To CLC. How much? One more place this will come. In the normal P&L. In the normal P&L. Purchases. Leave one line for writing to opening WIP. Purchases 6720. Purchases 6720. Clear? What's the next transaction? Transfer from WIP means from WIP it's coming back. What's the journal entry? First tell me. Transfer from the stores ledger control account, debit to WIP control. Listen, any entry where stores to WIP, WIP to stores, stores to wages, all this entry will not come in normal P&L. Normal P&L doesn't work with all these entries. So from raw material issue to WIP to FG, all this is not my worry. I will record opening stock, I'll record closing stock, I'll record purchase, balances, consumption. That is what normal P&L does. So this entry will come only here. To WIP control, to WIP control account 3360. By SLC account 3360. By SLC account 3360. The next one, issue to work in progress by WIP control. By WIP control. By WIP control By WIP control, how much? 6720. This side leave one line for opening two SLC account. 6720 to SLC 6720. Wherever you write between two control accounts, all that will not come in normal P&L. What's the next item? Issue to repairs and maintenance. What's the journal entry? First tell me. Stores ledger control account will be debited, credited. Credited and debit to which account? Factory overhead control account. Normal P&L will not come. Normal P&L will not come. By FOH control, open FOH control account. By FOH control account. By FOH control account. Write it two times, okay? Shortage is also FOH only. 840 to 52. Shortage is also normal loss. Last line says it's a normal loss. 840 and 252. 840 and 252. And open FOH control account. FOH control account. To SLC. To SLC. 840. 252. 840 and 252. Any entry between two control accounts will not come in normal P&L. Clear? We are done with the first segment, which is stores fully done. And WIP. Opening balance two places. The P&L as well as here. Two balance 2520. Two opening WIP 2520. Two opening WIP 2520. Clear? Wages applied. Wages applied means from the wages control account. From the wages control account, it comes to which account? It comes to the WIP control. All this will not come. What will come is wages paid. That I'll do later. So in the WIP, two wages control. Two wages control and open a wages control account. Two wages control. Two wages control account. Wages control account. 2520. Open wages control. 2520. Wages control account. Wages control account. Wages control account by 2520. Clear? Then it says overhead applied. Overhead applied means from factory overhead it is coming here. From factory overhead, this application and all we don't write it in financial accounting. So by WIP control here. By WIP control. By WIP control 90 lakh 8,000. By WIP control 90 lakh 8,000. 90 lakh 8,000. This comes here to overhead control 90 lakh 8,000. 90 lakh 8,000. There is a closing balance. This will come at two places. Here write by balance carried down. One line gap if anything else comes. By balance carried down. How much? 15 lakh in the normal P&L. By closing WIP. By closing WIP. 1520. Closing WIP is 15 lakh 20,000. Any doubts on this? Clear? I'll come to this finished output sold in a minute. Wages incurred. In the wages control, listen, you'll be writing to CLC. Wherever you see the word CLC, that will also come in normal P&L. That will also come in normal. Wherever you see the word cost ledger control, wherever you see the word cost ledger control. So to CLC account, to CLC account 2940. We don't open a CLC account and all. And here to CLC account in FOH to CLC account to CLC 2940 9550. Both items will come in normal P&L. Both items will come in normal P&L. To cost ledger control account 2940 9550 9550. Any doubts on this? Clear? This item here to wages 2940 to FOH control, not to FOH, to factory overhead. That's all. No FOH control and all. To factory overhead 9550. Normal P&L. Wherever you see cost ledger control, it will also come in normal P&L. It will also come in normal P&L. Any doubts on this? Two more items which will come only in P&L, and these are reasons for variation in profit. Reasons for variation in profit, right? By income from investment, by income from investment, 4 lakh, to loss on sale, 8 lakh 40. These two items are reason for variation in profit. As of now, there can be extra. There can be extra, but these two are reasons for variation in profit. Clear? Any doubts? Done? Now we will go in the order of balancing. First is raw material control. There should be a opening balance available. There should be a purchase available. There should be a issue to WIP available. By balance. By balance. By balance carried down and take it to normal P&L also. By balance carried down, take it to normal P&L. By balance carried down, take it to normal P&L. In the normal P&L, by closing raw material 35 lakh 28,000. By closing raw material 35 28. Direct material done. Order says direct wages. Order says direct wages. Two mandatory payment transfer to WIP, both are done. Is it tallying? No, not tallying means the gap is by FOH, indirect wages, by FOH control, by FOH control, indirect wages, indirect wages, by FOH control, indirect wages. If nothing was there in the credit side, I would have written by WIP control entire 2940. Entire 2940 I would have written by WIP control. By WIP control entire 2940. So this is to FOH, sorry, to wages control 4 lakh 20,000. 4 lakh 20,000. Wages control 4 lakh 20,000. Any doubts on this? Clear? And in the order, direct material done, direct wages done, direct expense not there, factory overhead. One entry for incurrence, one entry for absorption. Difference is under or over absorption, which whenever question asks reconciliation, you don't charge it to P&L. You don't charge it to P&L. What you will write by balance, just write by balance. I'll explain this in some time. By balance carried down. Under absorption carried forward. Under absorption carried forward. Carry forward means next year. I will not charge it to P&L. If I don't charge it to P and L, what happens? I'll explain in some time. But any question on reconciliation, you'll only carry it forward. You'll only carry it forward. It is some 20 lakh rupees. Under absorption, carried forward 20 lakh rupees. Clear? Direct material done, direct wages done, factory overhead done, WIP. There should be a opening balance available, transfer from raw material available, transfer from wages available, transfer from overhead available. There should be a transfer to FG and closing balance. Listen, in these type of question, from WIP we shift to FG. From FG we shift to COS. From COS we shift to, in these type of question, when entire output is sold, I directly will write by costing P and L in bracket cost of sales. By costing P and L in bracket what? Cost of sales, and this will directly, or what I can do, by FG control, open FG control, write that in the debit side by COS. Then open a COS account, write that in the debit side by costing P and L. Ultimately, will go to debit side of costing P and L. Ultimately, will go to debit side of costing P and L. So here, write by costing P and L in bracket cost of sales. By costing P and L, all this will not come in normal P and L. One crore 58 lakh 88,000. 1 crore 58 lakh 88,000. By costing P and L, 1 crore 58 lakh 88,000. Clear? Done. Now in the costing P and L, two cost of sales. For sales, the question has given some information. Sales is at a profit of 12% on cost. 12% on costs. Entire output is sold at a profit of 12% on cost. So this into 1.1 to 12% extra. 12% extra into 1.12. You will record this in normal P&L also by sales. By sales. Normal P&L also we will record it by sales. Now I close this account. To CLC account, profit for the year, to CLC account. This is my costing profit, 19 lakh 6,560. Costing is 19 lakh 6,560. Costing 19 lakh 6,560. Financial is you can just be in listen mode. Loss here. Listen for some time. I don't want to write. 587,440 is the financial loss, and costing showed a profit. Three reasons for this. One is income from investment. Second is loss on sale, and third is this item which we carried forward. In case I don't carry it forward, what would have happened? Listen, I would have returned to FOH control here. To FOH control 20 lakh 54,000. 20 lakh 54,000 would have come in this account to FOH control. Whenever reconciliation is there, we don't charge it. If you don't charge it, that is one more reason for variation in profit. That is one more reason for, and there have been exam question where that is the only reason for variation in profit. That is the only reason for variation in profit, because no other item was there. No other item was there. So 20 lakh 54, I don't charge it here. And my reconciliation, which you can do at home later on, key items. One is your factory overheads, 0 and minus 2054. What is minus 2054? Under absorption. Under absorption, which I did not charge. Which I did not charge. 840 and 0, 4 lakh and 0. 1960 is becoming 587, 440. 1960 is becoming. So, three types of reconciliation. One, they'll give you 10 reasons, find it. Second, you calculate first profit. You calculate second profit. And first profit is through normal P&L. Second profit through is a normal cost sheet and find out the reason. Third is doing the profit calculation through the non-integrated accounting. Non-integrated accounting, which is stores ledger control, WIP control, FG control. FG may not be needed in many questions. They'll say from WIP directly take it to cost of sales. And this is one more, this is not a very different type of a question. The following information is available for the financial books. uh, find out the profit as per financial book. Very simple. This will go to credit side. This will go to, listen for some time, this will go to credit side, debit side, debit side, debit side, debit side, debit side, credit side, and this will give me financial profit. This will give me financial profit. Then I have to prepare a cost sheet. Then I have to prepare a cost sheet. In cost sheet, be very clear. Whenever you have an item which is fixed in nature, an item which is fixed in nature, we absorb the overhead. We absorb the overhead. How do we absorb? For example, factory expense 1 lakh 50. 60% is fixed, which means 90,000 is fixed. And for every unit, my OAR is 1.5. For every unit, my OAR is 1. Fixed cost per unit is always misleading, but in this type of a question, you will get that number and absorb for the existing units. There will be under or over recovery. There will be under or over recovery. I'm not doing this question because of one time constraint, and it's a fairly simple question. But these 7 questions, if you practice in this chapter, it will be more than sufficient to kind of cover, unless it's a very, very tough paper. Recently, your Jan 25 MTP has come. Unfortunately, it's a very, very tough paper. Not sure why ICI has done that. That paper, even I solve, will take me 4 hours to complete that solving. So they have ended up asking extremely, extremely lengthy and tough questions. Not sure what was the objective of ICI in that paper setting. But okay, that is a mock test paper. In case paper like that comes, you may find it challenging to answer. But normal, your exam papers till now, I've seen all exam papers till now. Any kind of exam paper you pick and solve, you will be able to solve whatever chapters I've done. Whatever chapters I've done till now, any exam paper you pick it up and start solving, you should be in a position to handle, unless the paper is extremely, extremely tough. Even in that, if final paper comes very, very tough, ICI normally the correction becomes little lenient. The correction becomes lenient in case they end up asking a very tough paper. I don't see that kind of a tough paper coming in exam. To cut it short, in this chapter, first practice all the journal entries once. Practice all the journal entry. What you need to do is you'll open the concept book and just hide the journal entry. Just hide the journal entry and keep telling the journal entry for every transaction. Just do that. Second, hide this mandatory entries and keep telling the mandatory entries. If this is done, chapter is over. And for reconciliation, I have this format: serial number, item, end book, start book, difference where the sign is written, debit is minus, credit is plus. I multiply and call it as action, and again the difference comes. Clear? Any doubts? This difference is basically amount, and the earlier difference is only for the sign. Clear? I have not done one reverse working question. I would want you to practice that question. Please practice that question. We'll take a break of 15 minutes and then I move to the next chapter. Okay, I'll now move to the next chapter. We are left with 3 more chapters. One is on joint and byproduct costing, operating costing, and standard costing. I'll be doing standard costing in the next session. But before that, there is one base work which you have to 100% do and come, else you will not understand anything of standard costing. The work is very simple. In the when you go to the concept book page 100, when you go here, you will see some notes and there is a link which is given here. You'll have to click this link. You will find four videos of around 15 minutes each, which will tell. There are four videos. In that, one video you can ignore. One is on sales variances, that you can ignore, that's not part of your syllabus. One video you will find on material variance. One video you will find on labor variance. One video you'll find it on variable overhead variance. The material variance video, see it first time, you understood, okay. You didn't understand, see it second, third, fourth, till you understand it. Once you understand material variances formula, everything else will automatically understood by you when you see labor formula and the variable overhead formula. These videos, if you see it properly, in standard costing, I don't expect you to remember even one formula. There are so many formulae in standard costing. If you see all the videos properly and come, you will not be required to remember even a single formula in variances. So then in the class I will focus on solving the question rather than explaining the formula for the variances. So I just want you to do this. In case in a 15-minute video you're not getting clarity, then in my YouTube channel you will find a separate playlist for standard costing, which is 15 hours. You need not see all that. In that video one, the introduction video of standard costing, if you see, you will understand material variances properly. You will understand material variances properly in the first 1 hour. In the first 1 hour you will understand it. Once that is understood, everything else is formality. Everything else will become formality. But again I'm repeating, if you are not going through this part and I start explaining how standard costing is going to work, you will find it very, very difficult to grasp what I'm trying to explain. And this is very, very critical. So in the you have the soft copy anyway. There is the link is available. Click the link and then watch the videos. Watch the videos. Standard costing mandatory. You don't need to make any notes. Nothing is needed. You just need to keep listening to the video till you get clarity. Till you get clarity. Now I go to one more chapter. I will do a smaller chapter, which is joint, okay, which is joint product and byproduct. I'll be going to an area called as joint product and byproduct. In this chapter we have only two important discussion points. One is, a joint product is basically a situation where I use single raw material and produce two or more products. I'm producing two or more products using a single raw material. If these two products have almost same value, almost same value means one product is 40 rupees, another product is 25. Okay, they are called joint product. They are called joint product. If one product is 40 rupees, another product is 1 rupee, that 1 rupee product is called byproduct and the 40 rupee product is called main product. The 40 rupee product will be called as main and the 1 rupee product will be called as byproduct. So joint and byproduct costing is used in those industries where single raw material leads to manufacture of two or more products. If the product have equal economic significance, equal does not mean exact same value, but almost similar, they are called as joint product. If one of them is more important, for example, when you do sugar manufacturing, sugar can, when you use it, you get sugar. Along with that, you get something called as molasses. You get something called as molasses. Molasses is a byproduct. Molasses is a byproduct, and sugar is a main product. If their significance is different, higher economic significance is called main product. Lower economic significance is called byproduct. Now, why this is critical? When I'm using a single raw material, this is the raw material. I incur labor on this, I incur overhead on this. This keeps going. At some stage, you will see two, three products coming. This point is called a split off point. The point at which you are able to see two, three products. The point at which you are able to see two, three products is called split off point. It's called what? Split off point. Any cost which you incur till split off is called joint cost. Is called joint cost. And any cost which you incur after that is called further processing cost. Any cost till that is called joint cost, and any cost after that is called further processing cost. Now, what we need to do is we have to distribute this joint cost. We have to distribute this joint cost to product A, B, and C. That is one major discussion in this chapter. So the point at which two or more product emerge is called split off point. Cost incurred till split off point is called joint cost, and cost incurred after split off point is called further processing cost. The crux is how do you distribute this? The crux is how do you distribute? We follow four steps. First, we find out what is the joint cost. Second, we decide what ratio do I distribute. We have been learning about distribution in many places. Activity based costing, we distributed the cost. Even overheads chapter we distributed the cost, primary overhead distribution, secondary overhead distribution. So distribution is always there. So here also we have distribution. That is, I have the cost, I have to distribute. You identify what ratio, distribute it, and this is my profit statement. Sales less further processing cost, less further processing cost, share of joint cost, and I make profit. Now listen, a product can be sold at two stages. One is called split off, second is called after further processing. That is, I do sugar manufacturing, I can sell it as sugar, or after I get the sugar I do something else and make it as a sweet, and I can sell it as a sweet or I can sell it as a sugar. If I sell it as sugar, I will not incur further processing cost. I'll not incur further processing cost. So some question will say prepare a P&L assuming you sell it split off. In that case, further processing cost is zero. In that case, further processing cost is zero because you are selling it at what stage? You are selling it at split off stage. You are selling it at split off stage. And you can sell it at after further processing also. If you sell it at after further processing, then you will incur this expense. Now, what are the methods we have? First method is called physical measurement. The name of the method will give the answer. What is physical measurement is distribute on the basis of units produced. Distribute the cost on the basis of units produced. Calculate the cost, split in the ratio of 200 units, 300 units. That is called physical measurement method. Second method is called survey method. In survey method, what we will do is we will give certain weights. So, first product 200 units, second product 300 units. 2 is to 3 is physical measurement. Survey method 200 into 10, 300 into 20, some weights you will attach and then calculate a ratio. Weights you will attach and then calculate a ratio. That is called survey method. That is called survey method. Contribution margin or marginal costing method. Under marginal costing, classify the cost into variable cost and fixed cost. Classify the cost into variable cost and fixed cost. Variable cost on the basis of units. On the basis of units. Fixed cost, calculate contribution of the product. Calculate contribution. Whichever product has more contribution, more fixed cost. Less contribution, less. So fixed cost is distributed on the basis of contribution. On the basis of contribution. Next is sale value at split off. Sale value at split off means calculate the sale value at split off. That is the ratio to distribute. Sale value after further processing, calculate sale value after further processing, and that's the ratio. The name of the method will tell you what ratio we have to distribute. Sale value at split off means on the basis of sale value at split off. Sale value after further processing means on the basis of sale value after further processing, whatever the method name. Last is NRV method. Now, what do we do in NRV? This is one most important method. Under NRV method, the term NRV means net realizable value. What is net realizable value? Is my final sale value. Final sale value minus the cost incurred to complete manufacturing. Cost incurred to complete manufacturing, which is called further processing cost, minus cost incurred to complete. This is a definition in your accounting standard. The net realizable value as per your AS accounting standard 2 says inventory is to be valued at lower of cost and NRV. NRV is the final selling price minus the cost incurred to complete the sales minus the cost incurred to complete the product. So cost incurred to complete the product is further processing cost. Cost incurred to complete the sale is selling and distribution cost, and sometimes they may give profit margin also. If they give, subtract that also. Estimated profit margin. Estimated profit margin. Okay, one important decision we will be taking is, should you sell the product at split off or should you sell it after further processing? This is a very critical decision in most of the problem we are going to do. For doing that, I have to find incremental revenue. What is incremental revenues? If I sell after further processing, I will get 2 lakh rupees. If I sell it at split off, I get 1 lakh 50, which means extra 50,000 I can earn. Extra 50,000 I can earn by doing what? Further processing. But for doing further processing, I have to spend 60,000, which means extra profit is negative. This is not logical. I will not do further processing. I will not do further processing. I earn extra 50,000. I earn extra 50,000, but in order to earn that extra 50,000, I have to spend what? Extra 60,000. Extra 60,000. I am not going to do further processing. I am not going to do further processing. Okay, some of these points I'll explain later. Let's see a few questions and then I come back. Let's come to question one. This is a very simple question. The following particulars are in respect of joint production of A and B for a month. Direct material, direct labor, variable overhead, fixed overhead, sales. Compute the profit or loss. I'm not going to do profit or loss calculation. I'm just going to distribute joint cost. Once I distribute joint cost, you will understand how to do profit calculation. Let's do joint cost. Right. Joint cost equal to, right. Question number one. Joint cost equal to total of all of this. Joint cost equal to incurred for joint production. I've incurred this for joint production. Tell me the total of all of this. 12,000. Now, what we need to do is we have to distribute this to A and B. We need to distribute this to A and B. Method one is what method? Physical measurement. Physical measurement means 100 is to 150. 100 is to 150. So, first method, right? Joint cost of A, 12,000 into 100 by 250. 100 by 250. 100 is to 150. 100 is to 150. How much? And joint cost of B, 12,000 into 150 by 250. 7,200. 100 by 250 and 150 by 250. 4,800 and 7,200. This is first method. Very simple method. We have to just distribute on the basis of units. What you need to do then in exam situation, you will write sales less joint cost. Sales less joint cost. So technically in the end I have to do this. I'm not going to do it. Sales less joint cost profit. When I do second method, A and B profit can change. Overall profit will remain same. A and B profit can change. Overall profit is going to remain same. In short, this method technically does not have any utility. Does not have any utility. Only thing is you should use the right method of distribution, which practically I'll have information to do it. In exam situation, some problems doesn't tell the method. I can randomly assume any method and proceed ahead. I'll assume any method and proceed ahead. So first method, 3,200 profit, negative 1,200 profit, negative 1,200. Overall profit is 2,000. Next, second method is survey method or technical evaluation method. Survey method or technical evaluation method. Now, right, ratio is equal to second method. Ratio is equal to units into points. Units into points. A, B. Units into points. A, we have produced 100 units. Points for that is 3. Points for that is 3. B, we have produced 150 units. Points for that is 2. 3 and 2 are the points. So ratio is 100 into 3 is 2. 150 into 2. Net 1 is to 1. 300 is to 300. So 6,000 for A, 6,000 for B. 6,000 for A and 6,000 for B. Very simple, straightforward calculation. 6,000 for A and 6,000 for B. Now, second method, in case you had done, this is the profit. A's profit is 2,000, B's profit is 0, overall 2,000. Overall 2,000. Overall profit cannot change. Overall profit cannot change. A's profit is 2,000, B's profit is 0. Next comes contribution margin or marginal cost method. For this, I have to do a P&L. I'll have to do a P&L. First, we classify the cost into variable cost and fixed cost. Of the 12,000, direct material is a variable cost, direct labor is a variable cost, variable overhead is a variable cost, fixed overhead is a fixed cost. So write 12,000 and split into 2. Variable joint cost, fixed joint cost, 10,000, 2,000, 10,000 and 2,000. Clear? Variable split into 2, A and B in the ratio of units. A and B in the ratio of units. Physical measurement. A and B in the ratio of units. 100 is to 150 or 2 is to 3. 2 is to 3. 6,000 and sorry. Okay. 4,000 and 4 and 6. Any doubts in this? Any doubts in this? Now, what you need to do, listen only, no need to write. Here, sales 8, 6, 14. 8, 6 and 14. Variable joint cost 4,000, 6,000, 10,000. Contribution 4, 0 and 4. Whatever fixed is there, distribute in the ratio of 4 is to 0. Distribute in the ratio of 4 is to 0, which automatically means nothing will go to B. Nothing will go to B. If contribution was 3,000 and 1,000, 3,000 and 1,000, split in the ratio of 3 is to 1. In this scenario, very rare, one of the product can have negative, Negative means don't distribute anything to that product and distribute everything to the other product. Here we have a 0. Here we have a 0. So fixed cost will go as 2,000, 0, 2,000. Overall profit is still. My overall profit cannot change. My overall profit cannot change. So here I distributed, I got contribution. In the ratio of contribution, I have to do the distribution. One thing which can happen is sometimes one product can have a negative contribution, then fixed cost will not be distributed to that product. Fixed cost will not be distributed. Even 0 is there, we will not distribute it, and negative also there, we will not distribute it to that product. Clear? Any doubts in this? Okay, next question number 2. X company limited manufactures 2 products A and B and sells them at 170 and 260 per unit respectively. During a particular period, 200 of A, 200 of B is sold. Joint cost 64,500. Further processing cost 4,032. Product can be processed further and be sold at 200 and 300 respectively. Now, please understand few points before I start doing this. A product can be sold at split off. A product can be sold at split off. Joint cost can be distributed based on further processing value. There is no link between the two. I can sell my product at stage 1 or stage 2, and I can distribute my cost based on stage 1 values or stage 2 values. That's my wish. Both have no linkage. Many students try to link them together. In this question, it says manufactures 2 products and sells them at 170 and 260. The product can be processed further and sold at what rate? 200 and 300, which means today we are selling it at this stage. This stage is called, and this 200 and 300, the higher value is called further processing. And the question is saying you prepare a profit statement distributing the cost on the basis of sale value at split off, on the basis of sale value after further processing, on the basis of NRV method. Many students in their mind somewhere they make a mindset that if I distribute on sale value after further processing, it means I'm selling after further processing. No, there is no linkage. There is no linkage. You can sell at split off. You can distribute cost based on split off, based on further processing, based on NRV, based on physical units, based on contribution margin, based on technical evaluation. Any method you can follow. Any method you can follow. In this question, my sales will be 200 into 170, 200 into 260, whichever method you follow for distribution, whichever method you follow for distribution, because I am today selling it at 170 and 260. If that happens, my further processing cost in my P&L will be zero. My further processing cost will be zero because I'm selling my product at what stage? At the split off stage and not after further processing, not after further processing. Let's do all the three statements so that you get full clarity. Now, right, method one, sale value at split off. Method one, sale value at split off. Sale value at split off. Sale value at split off method. I have four steps. Step one, find the joint cost. Find the joint cost. Find the joint cost. In this question, joint cost is 64,500. Step 2, find ratio of distribution. Ratio of distribution. Which method are we following here? Sale value at split off, which is 200 into 170 is to 200 into 260. 200 into 170, that is the sale value at split off, and 200 is to 200 into 260. So the ratio is 200 into 170 is to 200 into 260, or 17 is to 26. 17 is to 26 is my ratio. 17 is to 26. Or you can even write it as 34,000 is to 52,000. Doesn't really matter. Clear? Step 3, distribution of joint cost. Distribution of joint cost. Joint cost of A equal to 64,500 into 17 by 43. 17 is to 26. 17 is to 26. 17 by 43. How much? 25,000. Joint cost of B, 26 by 43. 39,000. Step 4, profit statement. Step 4, profit statement. Particulars, product A, product B, total. A, B and total. Product A, B and total. Sales. See, sales will mean when are you selling it? It could be at split off, it could be after further processing. Don't link it with the method. My sales is today happening at split off because it says I'm selling it at 170 and 260. I'm selling it at 170 and 260. The product can be processed further. Can be means it could have been done. It could have been done. So 200 into 170, 200 into 260 sales. 200 into 170, 200 into 260 less share of joint cost, share of joint cost, share of joint cost. We just now calculated how much? 25,500 and 39,000 less further processing cost not applicable. I'm not selling after further processing. I'm not selling after further processing. I'm selling it at split off only. I'm selling it at split off only. That's my wish. I can sell it whenever I want. Question has said I'm selling it at split off. They gave me data. I'm happy to look at the data, but I'm not doing that. I'm not doing that. This gives me my profit. Profit is overall profit is 21,500. I'll change the method. Overall profit will still remain 21,500. Overall profit will still remain 21,500. Clear? This is first method. Method 2, sale value after further processing. Sale value after further processing. In this method, the ratio of distribution will change. Ratio of distribution will change. Step 1, find the joint cost 64,500, right? Step 1, find joint cost 64,500. Find joint cost 64,500. Step 2, find ratio of distribution. Step 2, find ratio. The ratio will change. What I've written there is the split of ratio. It will change now. Step 2, find ratio of distribution. In the question, sale value after further processing is 200 units into 200 rupees. 200 units into 200 rupees and 200 units into 300 rupees. 200 rupees and 300 rupees. So the ratio will change. 200 into 200, 200 into 300. Net it is 2 is to 3. 2 is to 3. The ratio will undergo a change. 2 is to 3. 200 into 200 and 200 into 300. You'll get 2 by 5. What's the number you get? 25,800. 3 by 5. 38. Now listen, most important part. This is where students make a mistake. They suddenly change the sales value here. No, you cannot change the sales value. You are just changing the method of distribution. Company continues to sell it at what stage? At split off stage. For distribution, I'm using sale value after further processing. They suddenly think now the sale value after further processing. No, sale value is sale value at split off only because I'm selling it at split off. No need to write this. Listen only. Minus 25,800 minus 38,700. Individual profits are changed. Overall profit would still remain same. Overall profit would still remain same. Further processing cost is not applicable only because I'm not changing my decision. Suddenly the question can say recalculate the profitability statement if you're selling after further processing. Then I'll bring it. Any doubts on this? Any doubts? Clear? Next method, NRV method. Method 3, NRV method. Step 1. Step 1. Find joint cost 64,500. Find joint cost 64,500. Step 2, ratio. This is a very important method. NRV will keep getting tested in exam. Even in that recent MTP, they had asked NRV. Will calculate. NRV formula is sale value after further processing. The formula is sale value after further processing less further processing cost less selling cost less estimated profit. This is how NRV is calculated. Sale value, the final sale value after further processing deduct further processing. The reason for giving further processing cost is to calculate NRV here, is to calculate the NRV. So sale value after further processing less further processing cost. If any selling cost is there, subtract it. If any estimated profit is given, subtract it. That is called net realizable value of the product, and that is the ratio to distribute. That is the ratio to distribute. What is the sale value after further processing? 40,000, 200 is selling price, 40,000 and 60,000, 40,000 and 60,000. Sale value after further processing 40,000 and 60,000. Further processing cost 4,000 and 32,000. 4,000 and 32,000. This is the NRV. Please distribute 64,500 in the ratio of 36 is to 28. 64,500 divided by 64 into 36 into 28. Distribute in the ratio of 36 is to 28. In the ratio of 36 is to 28. Thirty-six to 81, 28 to 19. 36 to 81, 28 to 19. 28 to 19. If I substitute this, profit of A will change, B will change, overall will still remain same. Overall is going to remain same. Overall profit cannot change. Clear? Any doubts on this? So to cut it short, again I'm explaining. Joint cost can be distributed based on split off method. Product can be sold after further processing. Product can be sold at split off. Joint cost can be distributed based on further processing value. Depends on what the question gives. Any doubts in this? Any doubts in this? So in the first statement, 21,500 profit. Second statement, 21,500 profit. Third statement, 21,500. Third statement is also 21,500. The individual profits are different. The individual profits are different. Any doubts on this? Clear? Let's look at question 3. In a chemical manufacturing company, 3 products A, B, and C emerge at a single split off stage in department P. Single split off stage in department P. What does mean is any cost you incur in department P is joint cost. Any cost you incur in department P is joint cost. A is further processed in department Q. Any cost incurred in Q is A's. A's further processing cost. That is the A's further processing cost. Product B is further processed in department R. So any cost you incur in department R is B's further processing cost, and C is further processed in department S. There is no loss in further processing. Cost of raw material introduced in department P. This is part of joint cost. Department P cost is part of joint cost. Then direct wages of department P. Direct wages of department P, again part of which cost? Joint cost. Department Q, A's further processing cost. Department R, B's further processing cost. Department S, C's further processing cost, and factory overhead is to be apportioned on the basis of direct wages. That is this 4,72,000. Please distribute it here. You have to distribute these two. P, Q, R, and S. P is joint cost. Q is A, B, and C. During the month, the company sold all the 3 products after processing them further. All the 3 products after processing them further. There is no opening or closing stock. If these products are sold at the split off stage, sold at the split off stage, that is without further processing, the selling price will be 20, 22, and 10. They are saying if you had sold it at split off, it's 20, 22, and 10. Prepare a statement showing the apportionment of joint cost to the three products. They have not given any method name. Anything can be followed. Anything can be followed. Obviously, you change the method name, the cost can change, but overall profit will remain same. Overall profit is going to remain same. Prepare a statement showing product wise and total profit as per current processing. Current processing is to sell it after further processing. Is to sell it after further processing. What decision can be taken to improve the profits? That is, for every product, I'm going to check should I sell it split off or should I sell it after further processing. And whatever I recommend, again prepare another profit statement. This is a full comprehensive question on joint and byproduct costing, where first we'll have to distribute the cost, then decide on further processing, then prepare a revised P&L. The method name is not given in the question. I can follow any method. Let's first calculate department P, Q, R, S cost. Department P is joint cost. Q is A's FPC, R is B's FPC, S is C's FPC. Working note 1, computation of cost, right? Computation of cost, particulars, department P, Q, R, and S. Department P, Q, R, S. Direct material, direct material, direct material, 12 lakh 68 800 in department P, 1268 800, 1268 800 in department P. Direct wages, 384 96 64 46. Direct wages, then factory overhead is 4 lakh 72. Put a total and distribute. 472 divided by I think 5 lakh 90 into 4 lakh 72,000 divide by 5 lakh 90 into the respective wages. Distribute to the various department. 4 lakh 72 divided by 5 lakh 90,000 into the respective total cost. Total cost, total cost, now nature, this is joint cost, this is A's FPC, B's FPC, C's FPC. A's further processing cost, B's further processing cost, and C's further processing cost. Clear? Now I need to distribute 1960. Method is not mentioned in the question. I don't know what is there in the solution. I am following physical units method. That's my wish. I'm following physical units method to distribute the joint cost. I think solution, I remember sale value at split off, but I don't want to look at, because in the end I want to show you whichever method you follow, it is fine. If problem is silent, you can't do much about it. All right, it is assumed company follows company follows physical units method for distribution of joint cost. Physical units method for distribution of joint cost. Physical units method for distribution of joint cost. Ratio of distribution 44 is to 40 is to 20. 44 is to 40 is to 20. 44 is to 40 is to 20. Do the calculation right. A's joint cost 19 lakh 60 divided by 104 into 44. 44, 40 and 20. 19 lakh 60,000 divided by 104 into 44 equal to 40 equal to 20 equal to 19 lakh 60,000 divided by 104 into 44 equal to 40 equal to and 20 equal to. Clear? Any doubts on the ratio of distribution? Done? Clear? Then profit statement. Particulars A, B, C and total. Sales less, this is the format, share of joint cost, further processing cost, profit loss. Sales, share of joint cost, FPC, profit or loss. It's a purely format driven chapter. Share of joint cost, further share of joint cost is there in your notebook. I'm just first copying all these numbers: 829231, 753, 846, 376, 923. Further processing cost is also there in your notebook: 172, 800, 115 and 82. 172, 115 and 82. 172, 115 and 82. It's there in your notebook. And we are selling the product after further processing here. We're selling the product after further processing. We're selling the product after further processing. So sales values are given in the question: 44,000 units into, right, 44,000 into 32, into 32, 40,000 into 24, 20,000 into 16. Complete this table. Clear? Any doubts on this? Done? Now, this statement and change in case C is making a loss does not mean I cannot further process and all. This statement just indicates that A is profitable, B is profitable, C is loss making. All this is of no use. Overall, company is making money. You change the method A, B, C, profit can change. This is part 1 and part 2 of the question. Statement showing apportionment, statement showing product wise and total profit. Next is what processing. Processing decision is should you sell at split off or should you sell after further processing. Next, working note 3, decision on further processing. Decision on further processing. Decision on further processing. Particulars A, B, C. Decision on further processing, for which I had shown a format earlier when I was explaining the base theory. Decision on further processing. Sale value after further processing less sale value at split off, and this is called incremental revenues. Sale value after further processing less sale value at split off. Less sale value at split off. And the gap is called extra revenue. The gap is called extra revenue. How much extra are we going to earn? Sale value after further processing is whatever we wrote earlier. Whatever we wrote earlier was sale value after further processing. 1408, 960 and 320. 1408, 960 and 320. Sale value at split off is I could have sold them at 20 rupees, 22 rupees and 10 rupees. 20 rupees, 22 rupees and that is 44,000 into 20, 40,000 into 22 and 20,000 into 10. This is an option which was there. Which was there. So 44,000 into 20 minus 44,000 into 20, 40,000 into 22 and 20,000 into 10. 20,000 into 10. This is the gap is the extra income of mine. The gap is the extra income due to further processing. The gap is the extra income due to further processing. And I subtract here less incremental cost and incremental profit or loss. Incremental cost is nothing but further processing cost. Incremental cost is FPC, further processing cost, less incremental cost, which is further processing cost, which we earlier had calculated. The gap is extra profit or extra loss due to further processing. The gap is extra profit or extra loss due to further processing. If you make extra loss, don't process it further. Don't process it further. And if you make extra profit, process it further. If you're making extra profit, process it. Extra loss, don't process it. Product A profitable, B loss making, C profitable. Extra profit. It is generating extra profit. Now, in the end, right, decision. First one is sell after further processing. Sell after further processing because it is profitable. It is giving me, I did not go by the earlier profit number. That is of no use to me. I only want to know incrementally are we making profits or are we making losses. Product A sell after further processing. Product B sell at split off. Sell at split off. Sell at split off. Third product sell after further processing. Third product sell after further processing. Clear? Now listen, the last statement you need not do. You have to repeat this table now. What will happen is in this table, just give me a minute. This is the statement which we did earlier. This is the statement which we did earlier. In that, A, I don't change anything. B, I have decided to sell at split off. 8 lakh 80. I have decided to sell at split of 8 lakh 80 and FPC will be 0. FPC will be 0. I have decided to sell at what stage? At split of. So FPC will be 0. Overall profit from the last time is going up by 35,200, which is basically this amount which you are saving now. You are saving. Some question will say, what will be the impact on profit? Without even doing statement, I can say my profit will go up by 35,200. Profit will go up by 35,200 because I'm stopping that mistake. I'm stopping the mistake which has happened and I'm selling it at what stage? At the split off stage itself. Now, if you look at the printed solution, method followed here is sale value at split off method, nothing to worry about. Overall profit was 357 for us. Individual profits would have been different. Individual profits would have been different. This decision table would have remained same for us also. Would have remained same. And in the revised statement, overall profit is 392. Overall profit is 392. Here also overall profit is 392. Overall profit is 392. I'm repeating again. You can follow any method you want to. In case clarity is not there, I don't have a choice. I cannot say that follow this method. I knew what method they had followed in the solution, but I cannot tell you that follow this method without giving you any logic for it. So any method can be followed. First, you will do a statement which is for these product. So this product is making a profit of 357 200. Decision on further processing is very important. What you do in decision on further processing is you write sale value after further processing, deduct sale value at split off, get the incremental revenue, subtract incremental cost and make incremental profit or loss. If incremental profit is there, sell after further processing. Incremental loss is there, sell at split off. Any doubts on this? This is one variant of the question. One is distributing the cost, doing existing statement, making a decision, doing a revised statement. In this, what can happen is question can have opening stock and closing stock. Opening stock and closing stock. What impact does it have? You'll understand now. So sales not equal to production. Sales is not equal to production. If units sold are not equal to units produced, it will indicate what? Closing stock. In this case, I have to calculate per unit numbers. I'll have to calculate per unit numbers. Why I have to calculate per unit numbers is, let's assume joint cost is 2 lakh rupees. In my P&L, I cannot write joint cost 2 lakh because what I will write in P&L is 2 lakh divided by units produced into the units sold, balance will go as closing stock. So in case there is a stock in a question, every number which we got, share of joint cost per unit, further processing cost per unit, decision on further processing also at a per unit level. Everything we will do at a per unit level, and whatever the question is asking, exactly the same thing. I'm going to do it. I think you need not do this because you understood the crux. Let's see it here. A company processes a raw material in department 1 to produce 3 products A, B and X, to produce 3 products A, B and X at the same split off stage. During a period, 1,80,000 kgs were processed at a total cost of joint cost, at a total cost of 12,88,000, which is the joint cost, and I have produced 18,000, 10,000 and 54,000. 18,000, 10,000 and 54,000. A and B are processed further. 1,80,000, 1,50,000. X is processed further 1,08,000. So last question I had to do all the calculation. 4 numbers are directly available. Joint cost 1288. A's further processing cost 180. B's further processing cost 150. X further processing cost 1,08,000. I produced 18, 10 and 54. I have sold 17, 5 and 44. I have sold what? 17, 5 and 44, which means there is a closing stock. And this is the question as itself said, calculate per kg, but it's not mandatory. The question may not say calculate per kg. First thing we have to do is distribution of joint cost, which I'm not going to explain in detail. I have 12 lakh 88. I have to decide method. I have to decide method. Method could be units produced. Method could be units produced. Solution is following: sale value at split off method. Sale value at split off method. We have distributed 630, 280 and 378. 630, 280 and 378. Whichever method we follow, that doesn't really matter. Now the question is saying prepare a statement showing the cost per kg of each product, indicating joint cost, FPC, and total cost separately. Statement showing product wise and total profit with supporting calculation whether all or any of the products should be further processed. This requirement, even if they don't give, I have to do it. I have to do it at per unit level. Now you've been listen more particulars on three products we have. Particulars ABX. First is share of joint cost. Share of joint cost, which I'm copy pasting: 630, 280, 378. 630, 280 and 378. I have to divide this by number of units. I have to divide this by number of units, which is 18, 10, 54. 18, 10 and 54. This will give me JC per unit, joint cost per unit. Where will I use this? Whatever units I'm selling, I'll multiply with JC per unit to calculate cost of goods sold. To calculate the cost of goods sold. So JC per unit is 35, 28 and 7. 35, 28 and 7. Then similarly, further processing cost, which is given in the question. Further processing cost given in the question is 180, 150, 108. Number of units, FPC per unit, and total cost per unit, 45, 43 and 9. Now the main difference is this table. When I prepare my profit statement, earlier I was writing share of joint cost as it is. Now you cannot do that because you have not sold it fully. So what I will do here, listen. Key products ABX. Sales given in the question for how many units? 17,000. Sales is for 17,000. So joint cost will be 17,000 into 35. 17,000 into 35. And further processing cost will be 17,000 into 10. 17,000 into 10. 35 and 10 are the numbers for the first product. 35 and 10 are the numbers for the first product. 17,000 into 35. 17,000 into 10. You cannot, if everything is sold, then no need to do per unit, directly copy paste 630 and 180. Second product, 5,000 into 28, 5,000 into 15, 5,000 into 28 and 5,000 into 15. Third product, 44,000 into 7, 44,000 into 2, 44,000 into 7 and 44,000 into 2, and sales is given 1224, 250, 792. This gives me the profit of every product. Decision on further processing, which has been asked. The question is saying state whether all or any of the products should be further processed or not. That also at a per unit level. How will I do at per unit level? Selling price. Can you tell me 12 lakh 24 divided by 17,000? 1224 by 17,000. This is per unit selling price after further processing. If you sell at split off, it says 50. If you sell at split off, it says 50. So 72 minus 50. 22 is incremental revenue. Incremental revenue per unit. Incremental cost is 10 rupees. Incremental profit per unit is 12 rupees. All calculations will have to be done at the per unit level. Will have to be done at a per unit level. So see here, 12 rupees extra profit, 5 rupees loss, 6 rupees extra profit, sell after further processing, sell at split off, sell after further processing. Clear? Any doubts in this? Okay. Okay. Question 5 alone, I want you to practice it at home. Maybe in the next session, I may discuss. I'm yet to do byproduct costing. 5 has something called as processing loss. So you'll have to do with some input output statement analysis. You attempt it at home. I will discuss it if time permits in the next session. Else, I'll be moving to byproduct costing. And after that, we'll move to standard costing. We move to standard costing. Most probably one chapter will not be able to do, which is operating costing, for which the videos are already available in my YouTube channel. So next session when I do, I'll first complete the joint and byproduct costing, where some more concept and byproduct costing is pending. Byproduct costing is pending, and that one question is pending. If possible, attempt it. If you're not able to get it, anyway, I'll discuss it, and then I'll complete byproduct costing. I move to standard costing. For that, please watch those videos. Please watch the videos and come. We'll complete standard costing in the next session. It's again 2:30 to 5:30 only next session. But there, no, not tomorrow, Monday. But in that session, in case my standard costing is not getting over, I may stretch it little bit. I may stretch that little bit so that I complete standard costing. Operating costing part, I'll give a video to you. Clear? With this, I'll end the session.